Hello and welcome to the Commercial Real Estate Talk podcast. I'm your host, George Morales. Thanks for tuning into this weekly look at commercial real estate. Today is episode 135. It's Thursday before Labor Day weekend, so we're going to try to keep it as short as possible and wish you and your families a wonderful holiday and barbecue on Monday. Everybody stay safe, enjoy time with friends and family. But a couple articles from CoStar came out this week. The first one highlights the fact that there is something going on with large blocks of office space being leased. We want to talk about it. And then secondly, we're going to look at a few articles from developers that are banking on this office recovery and demand, specifically in Miami, announcing two major office projects that are going forward. That's actually the two, if you've been a listener for a while, that we predicted would be the first two and potentially the only two to move forward. So before we begin, if you haven't already, please do us a favor. Go to Commercial Real Estate Talk channel on YouTube, and perhaps that's where you're hearing or listening or watching this podcast, and hit that subscribe button. Well, I can't find it here on my screen because this is my admin page, but we've got 30 some odd videos already. Listen, the intent is to make commercial real estate easy for the customer, for the consumer. Now, you might be a business owner, you might be a realtor just looking to sharpen your knowledge of commercial real estate or test it out to see if it's something you want to work in. Maybe you're a realtor selling homes and you, on occasion, do some commercial deals. These subjects are something you really need to know about if you're going to advise your client and really help them with their real estate, commercial real estate. And we've got a nice little anthology of 1-minute shorts from common area factor to triple net leases, rights of first refusal, modified growth, supply and demand, full service lease, monthly rent, SNDA, and so forth. So we've got a growing list. We're trying to pump out one of these a week, maybe every other week, but we've got enough on here already for you to spend a few minutes and sifting through these and learning, at least scratching the surface on commercial real estate. You want to take a deeper dive, go to don'tsignthelease.com/book, and I've got a great book for you that takes these same subjects and really dives into the weeds, shows you these subjects in practice when it comes to commercial real estate. So help the show out, hit that subscribe button. Let's push this 53 upwards. We love all 53 subscribers. We want to spread the news about commercial real estate. Okay, the first article we're going to take a look at: tenants sign blockbuster renewals to help buoy national office recovery. Companies willing to recommit to large blocks of space for longer terms. And there's a beautiful picture of Boston-based biotech company Vertex Pharmaceuticals corporate headquarters. It's the largest office deal in the city since the start of the COVID-19 pandemic. Think about that. Largest lease in 4 years in Boston, of course, comes from biotech. And listen, I've probably failed to mention we're wearing some merch here. This is Blue Box Real Estate merch. Some nice hats. It's fresh. It's even got the labels still. You can hit us up, PM, if you want to sport some Blue Box Real Estate merch. I'm sure you can get it just in time for Christmas, if you like. All right, let's get into this article. A growing cohort of corporate tenants is recommitting to large blocks of commercial real estate, helping to lay the foundation for a recovery of the national office market. Across the United States, renewal deals among large tenants, including Bank of America, mortgage giant Fannie Mae, investment firm Bain Capital, and telecommunications provider Verizon account for almost half of the 156 office leases spanning 100,000 square feet or more that have been signed since the beginning of this year, according to CoStar data, on track to surpass last year's activities. This is all great news. Those renewal agreements collectively total more than 14.1 million square feet. While there are some companies reducing their space or relocating elsewhere, a large portion are staying put. Why is this such a big deal? It's because right now, starting in 2024, probably for the next 3 to 5 years, we're going to really feel the effect of the work from home policies that have taken effect. These leases that are being renewed now, especially these 100,000 square foot leases, they were signed 10 years ago. They were signed in 2014. Think about it. Barack Obama was the president. We were living in a different country, in a different world. Since then, we've had several presidents. Since then, we've had pandemics. We've had a host of things happen that has really rocked commercial real estate and even the corporate world of how they use and occupy and think about their real estate. So this is a good test study the next 3 years about the staying power of the office sector. And so early on, this is a good indicator. Large corporate users are keeping their space for the most part. Some are downsizing, probably because a third or more of their staff is working from home. So they no longer need 100,000 square feet. Maybe they only need 50. But what the article is pointing out to is that most of them are staying put. Most of them are keeping their office. They've kind of gone through all their plans and saying, you know what, we like people coming into the office and collaborating, and this works better for us. That's good for commercial real estate. Let's keep going. Most organizations now have a much clearer picture of how they want to use their office space, but they're behaving more conservatively now, said Phil Mobley, CoStar Group's National Director of Market Analytics. They're more apt to renew in place than they were a year ago, when more of them were doing the move and shrink. They're doing this in part to avoid expenses of relocating, but they're also because they're beginning to be less available premium space in ideal locations. Now, that's the condition we find Miami in. Your premium spaces in your CBD market, especially Brickell Avenue, there isn't any. And so the next two articles will show you what developers are going to do about it. Now, there's still some key spaces in other submarkets in South Florida, like Coral Gables, especially Doral, Waterford, Airport West. Go up to the Cypress Creek Market in Broward, and you can pick your 20,000 to 40,000 square foot block of office space almost in any building. But before you do that, please contact us at Blue Box Real Estate, blueboxre.com. We want to help you find and negotiate that space. All right, Boston drug developer Vertex Pharmaceuticals, their lease was going to expire in late 2028, and they expanded through 2024. So obviously I skimmed ahead, but think about that, tenants. This is a very wise move. And this is a message I'm trying to bring home to the local South Florida office tenants. So if you're listening, please, here's a case where Vertex saw our lease expires in 4 years. We know we're going to be committed to this industry, committed to the city, committed to this space. It works. Right now is the best time to negotiate the best deal. Why wait till 2027, 2028, when the market fully recovers, people feel better, and the rates are going to be significantly higher? So Vertex took advantage of this low-end market, this commercial real estate kind of lull that we're in for office, and used that to expand. And I'm sure they got a lot of goodies, right? Free rent, TIs, they recast their base years, wiping out additional rent and operating expenses, maybe built in some free parking, maybe added some language for more amenities, retrofits of common areas, and who knows? But they said, let's take advantage now. Wow, I mean, that's a 20-year term from today. Probably not going to see that for most tenants, but it is a good practice. If you're 5,000, 3,000 feet or higher, and you have 2 years or more to go on your lease, don't think you've got to wait. Get to a tenant advisor at Blue Box Real Estate. Reach out to us. We'll formulate a real estate strategy. You should be talking to your landlord now, because they've got ears to listen right now. They're concerned. They've got more vacancy than they've had. It's an election season. Things are in a little bit of a turmoil. They would welcome an opportunity to talk to their key good tenants and expand their lease, maybe even lower the rate that you're paying now and give you some incentives to do that. So please, tenants, take this. This is just a good sidebar conversation. It's a great time to discuss renewing and extending your lease with the landlord. And listen, if they're not game, okay, fine. See you in 2 years or not, because we have plenty of time to execute a plan to vacate and go find another more aggressive landlord. Maybe you'll find a landlord who says, listen, you have 2 years of term remaining. We want you so bad. You come in a year and we'll carry the last year of your rent for free. And you can start off in a brand new built space and make a change. So listen, now is a good time to start talking to your tenant advisors. My clients, after Labor Day weekend, I'll be reaching you, and I'll probably send you this article as a case study of why we need to talk to your landlords early. Okay, but let's keep going. Plano, Texas. Okay, so now we're leaving Boston. Hotel management company operator Enbridge Hospitality extended the deal for its corporate headquarters, HQ 53 on Legacy Drive, signing on to fill the entire 248,661 square foot property for an additional 5 years. To be clear, the latest round of high-profile renewals are existing blocks of space companies already occupy, and they're simply choosing to keep it. Well, listen, that's better than getting that space back in negative absorption and going backwards. So that's good. We need to hold the line. While that is better outcome than dumping it on the sublease market, downsizing or terminating the deal altogether, there aren't agreements generated new sources of demand. The upshot is that it's supporting overall occupancy because there are fewer move-outs, but it's not really net new demand, Mobley said. I read it as cautious behavior. And there's a beautiful picture of Bloomberg's nearly 1 million square foot renewal. I assume it's this building here in the middle at 731 Lexington Avenue, Midtown Manhattan. One of the largest office deals so far signed in 2024. I mean, one of the largest. We've had other million square feet. This is Bloomberg, okay? So every time you go to Bloomberg News, I get that little note, Bloomberg's top 5 things that you need every day to know. This is where all that's coming from, okay? Look at that. I mean, it's a tower of jungles, a jungle tower, concrete jungle in Manhattan. Unbelievable. All right. Shifting priorities. A broad range of office tenants across the United States are adjusting their real estate portfolio to adapt to COVID-19 pandemic era reality where they don't need as much space. Portions of the workforce has yet to return to a full 5-day work week. Some companies have offloaded extraneous space to curb expenses, prioritize profitability. We've seen this across the board. Doesn't matter if you're a 100,000 foot tenant or a 1,000 foot tenant. Tenants collectively signed on for 395 million square feet last year, according to CoStar data, 13% below the annual average reported in the years leading up to the pandemic. What's more, these deals are about 16% smaller on average than those signed between 2015 and 19, exasperating the vacancy challenges and onslaught of available space littered across the country's largest office markets. Even so, for many landlords, renewal news is a good news. Okay, listen, it's not bad news. So we're not necessarily moving the ball forward into the end zone, but we're not going backwards. We're not fumbling and throwing interceptions. So I have the awesome privilege of coaching my son's City Flag Football League. We got smoked, unfortunately. Our first game, I think coaching had a lot to do with it. But it's one thing when you're not moving forward, right? When the offense just isn't clicking. It's another thing when you're turning the ball over and you're going the other way. So we've been going the other way for a couple of years now in the office sector. And these renewals are showing that, okay, hey, first down, all right, it might be now, only got 1 or 2 yard gain, but at least we didn't get sacked. At least we didn't fumble. Second down, all right, we might have only made a 1 or 2 yard gain again, but now third down is manageable. And so what they're saying is for office sector, getting these large block renewals and not getting space back like what was anticipated is a sign that things are leveling out. You first need to level out to the bottom before you can look up and get going forward. And that's what's apparently happening here. And I think this bodes very well for commercial real estate. I was just having lunch today with a client, a former client, current client, investor, and we were talking about perhaps office should be the number one priority on an investment because you are now buying cheap. In some cases, there was a very famous article this week that 53% off office right now from a purchase perspective. There's a few major properties that sold in Miami and Coral Gables market that sold for 60 cents, 70 cents on the dollar. One sold sub $200 a square foot. So now is the time to get good quality assets because it seems like we're leveling off. Maybe we have a couple more months. Maybe it will level off officially when we look back early 25. But the point is now's the time to start playing Monopoly and getting those boardwalk pieces in place. All right. For National Real Estate Investment Trusts, including BXP, Douglas Emmett, and Franklin Street properties, renewal activity has been outpacing new lease volume. Media and financial data giant Bloomberg's decision to extend its lease in Manhattan headquarters was not only the largest single office lease to be signed so far this year, but also accounted for nearly 2/3 of the 1.6 million square feet of deals landlord Vernado Realty Trust inked throughout the second quarter, ending in June 30th. I firmly believe in the New York City's continued growth as a global capital that creates jobs and attracts talent. And I believe in the power of in-person work to drive collaboration, innovation, and 731 helps do that. Okay. All right. Signing on for space. The prioritization of in-person work has meant an increasing pool of tenants, many of whom had significantly scaled back as a result of the pandemic. Nearly 40% of the respondents to CBRE's latest office occupier sentiment report expect to increase their spatial requirement over the next 3 years, a marked spike compared to 20% that planned to expand last year. That jump underscores a shift away from post-pandemic, this is the key, focus on real estate reductions, the report authors wrote, adding that while larger portion of tenants are weighing possible relocations as a way to upgrade their space, 80% of respondents are considering renewing to avoid a high cost of moving and building out space. You're going to get your best deal by going to your current landlord. He has the most to lose. He has the most to gain, or she, or whatever. He is in terms of landlord, because if you vacate that large block, how long is it going to be before they fill it? So you've got downtime, and you're talking about many cases, they're razor thin on their loan to value ratios, these landlords, with their lenders. They can't afford to lose your monthly income for any given period before falling into default on that property. Not only do they have the downtime and the risk of default to the loan, to release that space, they're going to have hefty tenant improvement dollars, and they're going to have to pay us brokers to backfill that space and give other incentives. Maybe they're going to now have to renovate the building. Maybe they're going to have to give free rent and so forth in order to attract new tenants. So tenants, can't stress this enough. Office tenants should be talking, if you have 2, 3, 4 years to go, depending on your size, you should be talking through a good tenant advisor to your landlord. Why do I say through your tenant advisor? If you go directly to your landlord, there's no hedge, okay? There's no one protecting your fiduciary interest. The landlord has a landlord advisor. They're paying a broker, whether they're in-house or they hired a national firm like a JLL or CBRE to represent their needs. And so those brokers, though they're very nice and very smiley, and I've played both sides, they're not working for you. They're working for the landlord. And so they're going to do whatever they can to get the best deal for the landlord. You need to bring a tenant advisor, not only to have someone fighting to get you the best deal, but second, it creates an environment of leverage and competition. When a landlord sees that you have representation, and I'm not talking about an attorney, I'm talking about a commercial real estate advisor. They understand that you're being advised on market rents, market conditions, and that you can possibly relocate, that they will take you out to the market. Because the broker at the end of the day doesn't care whether you end up in building A, B, or C. They're going to show you, they're going to do cash flow models, they're going to negotiate, and the decision's ultimately going to be up to you, but you're going to be a more well-informed, you're going to have all the data and be able to make a good decision as opposed to just going directly to the landlord and trying to cut a deal that maybe it's good, maybe it's not. How do you know? So again, tenants should be talking to your landlords. All right. Larger companies, those upwards of 10,000 employees, are the most likely to downsize, CBRE reported, often due to the need for less space because of hybrid work policies to address inefficient or excess spaces that existed before the pandemic, or simply reduce extraneous costs. Oftentimes, these reductions are timed to coincide with lease expirations. Some could opt to renew leases but shrink how much space they occupy the property. All right, and then one more. Fannie Mae renewed, it looks like, 340,000 square feet from Car Properties for a smaller headquarter presence. Okay, there you go. All right, and they offloaded all of its 713,500 square foot space. Government-sponsored deal. There you go. Bank of America, for example, recently signed a 10-year extension for 553,800 square feet. Wow. Listen, you think all those bank fees sure add up. They've got 553,800 in Addison, Texas, okay? And the financial giant also signed to be the anchor tenant at Parkside Uptown, 500,000 square foot office tower, slated to finish construction in 2027. All right, so looks like the banks are doing well. Fannie Mae, also the lending arm of the government, doing well. What does that tell you? It tells you that the economy is settling. The Fed's going to cut rates, right? And we're going to get back to pumping tons of cash into the economy, which is going to continue to cause inflation and just keep us in this quagmire. But that's a podcast for another show. Okay, we're going to move on quickly. 2 new buildings, 2 super tall structures announced moving forward in Miami. Now, why do these parlay? Because Miami is one of those key markets that if you need 20,000 square feet or more and you want to be in Brickell Avenue, if you're willing to pay over $100 a square foot, you don't have many options, if any. I know of at least one project on Brickell Key Island. Contact us. I used to manage or lease that building for Tishman Spire. Beautiful renovation. call me. We're happy to schedule tours there. They can accommodate large block users. I don't believe anybody else can. The new building 830 Brickell Plaza is now fully leased. They topped out near $200 a square foot. And so now we have supertall. This again is from CoStar. Supertall headquarters for billionaire Ken Griffin's Citadel could break ground next year. Listen, it's August 28th. Next year is around the corner. They're already in for permits, 54 stories, Biscayne Bay. Look at this beautiful building. It's going to tower way up into the sky and really define the Brickell Avenue skyline. The building next to it is the current tallest structure in Brickell. That's the Four Seasons Tower. So you can see how much taller this one is, unless it's perspective. But yeah, look, good things to come for Miami. Proposed 50-story skyline changing glass tower is also in consideration to serve as the headquarters of Citadel, the $63 billion hedge fund that cemented Miami's rising status as a financial hub with its plan to relocate its base city from Chicago. Plans for the new Foster Partners design tower on Biscayne Bay were filed with Miami-Dade County, calling for 1.7 million square feet of space. 1.2 million of that will be dedicated to offices, about 413,000 and change to be split. 212 room rooftop hotel, 46,750 of open space planned, including public waterfront terrace connecting the rest of the Brickell neighborhood's Baywalk. All right, so we will, I'll leave it there. Here's another beautiful picture with the Baywalk. It's a boost for Miami. Listen, Miami doesn't have quality large block space. They're gone. And so this makes a lot of sense. If you're ever going to build, listen, they bought this site for $363 million, 2.5 acres. So what is an acre going for in your city? In Miami, 2.5 acres. So for $363 million. I had a client that we were near contract on this site for about $223 million 10 years ago. And the deal never went through. And I'm sure the Hollow family that sold this for $363 million is glad that deal did not go through. All right, so there's other buildings announced. Let me give you one last beautiful glimpse at this project here. And this actually will be Brickell Bay Drive. It's not on Brickell, but it's Brickell Avenue Financial District. You see this build, there's a building, I think it's this building here, if you can see my cursor. That is 1001 Brickell Bay Drive. So this building here, don't look for that to stay long either, because all the tenants have demo clauses. And this building is, I believe, being shopped as well. And it's going to be a future redevelopment. I doubt it. Maybe it's office, but most likely another condo tower. So you probably see a nice new tower here somewhere. And just for reference, this little building here, that's 801 Brickell. That used to be, or currently is, a Class A. But listen, once superstructures like this get built, these are going to be the Class B buildings in Brickell, and that's what's happening. You've got this redefining of what is Class A, what's Class B in Brickell. All right, let's go one more. Here's the other superstructure that's been announced. And let me point some things out here for you. This is Banco Santander, again from CoStar. Santander Bank moves forward on changing Miami's skyline. You see a connection here. Skyline changing glass tower. Changing Miami skyline. I mean, listen, I guess every building technically changes skyline, but plans call for demolishing the aging office for a 41-story tower for Banco Santander's headquarters. Listen, this is a very unique looking building. This is the Four Seasons Tower that I had mentioned before, which in this picture is this building here. Okay, so is it? It looks like. Okay. So let's go on. So this site right here, you can barely tell. That is not the Four Seasons. Check that. That is not the Four Seasons. The Four Seasons is over here. So this is a residential tower. And boy, I wish I could tell you the name of that one. All right. So this piece here, oh, that's Panorama. All right, I'm sorry that my brain is connecting now. This is Panorama Tower, okay? This is, I don't know, 1,500 units built by the Hollow family. Now, they used to own this site. So they're the ones, the family that developed this tower sold this property to Citadel for $363 million. And this was built in the last cycle. Now look, they have 2 floors of 50,000 feet that have been shelved for about 12 years. So you want a good deal on office space? It's a little quirky, not a lot of windows, a little quirky. Own elevator. It'd be a beautiful little headquarters space right there. Okay, so Banco Santander is further down this way, further south. This is about 12th in Brickell. This is about 14th in Brickell. Okay, that's the Four Seasons. So this is currently the tallest structure on Brickell. Panorama Tower. Maybe there's a case to be maybe between one of those two. So Banco Santander used to be an old tenant of mine, 1,000 Brickell Avenue, way back in the 90s. They purchased a newly renovated building, 1401 Brickell Avenue. They're going to tear that building down in order to build this beautiful structure, 41 stories. Let's get into this. Santander is moving forward with plans to build a 41-story office tower in Miami's financial district, demolishing the 70s era office it owns in the neighborhood. Santander plans to demolish in the next few weeks. Wow, I need to be there when that goes down. A 50-year-old office building in the heart of Brickell's financial district to make way for Santander Tower, 41-story office building. All right, the plans announced in February include 1.6 million square feet. Half of the space, so 800,000, will be offices. The remaining will be retail, 1,496 parking spaces. Yeah, there it is. Look, this is one of my favorite buildings on Brickell. It is beautiful, but there's no place for a 14-story office building. Brickell Avenue, not with today's $150 to $200 a square foot. This is a 188,000 square foot office. Now, this has been the value play building in Brickell for many years. Deli Lane, for those of us old timers, right here in the first floor, the best deli in Brickell. They've been closed for a while, but out with the old, in with the new. Miami doesn't keep any of their history. It'd been wonderful to keep this little building amidst all the towers. Beautiful views from this little building, great window line. You know, it's just a good boutique. We're losing the good boutique buildings in Brickell. And I sense that they're all going to go to Coral Gables. And these tenants have already landed places. So if you're a broker and you're thinking, hey, that building's coming down, it's been old news. They were from late last year. I talked to one or two tenants, but one of the tenants went to Miami Beach. They all just scattered. But this was the building. If you had a 2,000 to 3,000, 4,000 square foot demand, you had a law firm, financial firm, you know, you live like a king in this building, right? You park, you walk right into the garage, right into the lobby, go up to your floor. You don't get lost. It's not a superstructure. So gone are the buildings. And I guess that size is going to be filled with the co-working on Brickell. But that looks like it's going to happen. They've submitted for plans. So we've got 2 new towers coming. One at 12th and Brickell. The other one on 14th and Brickell. So you'll have this building, and then you have another tall building right here, superimposed. So new changes coming from Miami, parlayed by what many believe are the demand for large blocks of space, which again, in Miami, Brickell Avenue, you have nowhere to go. Stay tuned. You're probably 3 to 4 years away from one of those buildings actually impacting the market in any good way, which means tenants, if you think any one of these buildings are going to bring in more supply and bring rent relief, it's not going to happen. The cost of construction, what they paid for the land, Santander a lot less than the super tall structure here by Griffin, but they're going to need to hit $150, $160 a square foot and higher in order to justify these buildings. So be prepared. These high rates are here to stay. You're going to have to maybe find some of the older A buildings that they're going to be the donor buildings, right? Here's it's not a forecast, estimates, God willing. 1221 Brickell, which is also owned by Citadel. Probably not, because rates have never kept pace. They're at $75, $80 there. Ken Griffin, you may want to contact Blue Box Real Estate to come in and help you out. We'd be very happy to lease up and push rates. You shouldn't be at $75 a foot. You should be at $9,500. You should be charging what everybody else is charging. Don't, sometimes when you ask too little, people ask what's wrong with that space. You need to keep up with the Joneses and then negotiate strike prices, but don't be 25% below market. Okay, I'm getting off track. 800 Brickell, 801 Brickell, Brickell Key, 701 Brickell, maybe even 600 and 1450, 1395, 1441. These buildings are going to start donating tenants, especially their large financial firms and law firms that need to move and they can't anymore. There's no breathing room. They're already paying a high rate. Let's go to the new building. So usually Miami fills up one building with robbing Paul to pay Peter, Peter to Paul, whoever. This last round, we had a ton of activity come down from New York. I'm told that slowed down, but I expect some of that will also. Listen, when Ken Griffin builds this building, there are going to be so many other financial firms who want to be near him and near this citadel that they'll probably fill up the majority of this with just friends and family. It's going to be a very successful project. So anyhow, that's it for today. Office, look for a recovery. Things is feeling a little better. Now's the time, tenants. Talk to your landlords. Now's the time, investors. Let's find deals. We're happy to hunt for you. BlueBoxRE.com. And remember, Proverbs 20:18, plans are established by counsel. By wise counsel, wage war. Again, thank you for tuning in. I'm George Morales. Have a great week and a wonderful Labor Day weekend. Good day.